Okay, quick portfolio update, I suppose, is the best way to call it. So let's just run through the dashboard. Index trend model, virtually 100% bullish, giving me virtually 10R heat on account to play with. Actual heat, just ignore this at the moment because I've still got a couple of ads to put in this account. I'm going to catch up with it over the holiday. So on the trend trades, I'm more invested than what this shows. Actual heat will be slightly out, available heat will be slightly out. Heat overload should be 0 still. Just need to check all my trail points as well, see if I can free up any heat in other areas. Drawdown of all-time highs, obviously 0. We're pushing all-time highs right now, as we speak. Nice pop in VLX this afternoon. Stock volatility, yes, I will be working with that a bit when I update. I have a look through the trades I've got on and see where the trail points are, and I want to add to some trades. It will throw my invested up a bit further. I've got swings in the background as well. I'm basically near 100% invested, but I use margin for my swings. So this is just the trend trades in here. Average R, fantastic. Anything over 1 is fantastic. In average R, especially with no huge kind of multiple R trades in the portfolio at this time. Lots of trades we've taken. Dogs are just having a fight behind me. So that's really good at the moment. Win rate's 92. It's just because we've got one. What's it? If you sell your losers, your win rate will go up. This is open trades, not closed trades. Dogs are going crazy. Yield, ignore that. I haven't got that plumbed in. So, open R, 16.87R. Weeks P&L, we're up 0.5%. Well, basically, we was up 0.3 yesterday. We're up a bit. It dropped on the open. If you run your portfolio live like I do, on the open you get all those wide spreads. Once the market tightens up a bit, get a little pop in the odd stock, and that's where we are. This is my heat limit. Obviously worked off that. Divide how bullish the market is by 10. And for anyone, I think I'll probably just talk about this because I'll probably share this. I'll probably just share this one on the public. So the basics behind the money management, what underpins not going broke in the market, is basically I risk 1% of my account at stop. That I am always 100 trades away from blowing the account, but my maximum limit is at the moment 9 trades, or 9.4 to be exact, because I run heat. So I limit the heat of what I can have running. When the market's in a good mood, I will get trail points. I will free up new heat to take new trades. I know I've been through this many times before, but just do it again. There's a reason behind it. The reasoning is, if the market lets you trail and add and trail and add, your best ideas, what should be the ideas you take first, it means the market is healthy, and as the market gets even more healthy, it will, you might in a bear market, it might be giving me 0.3 heat, and I'm avoiding virtually everything. But as the market gets more bullish, it will free up heat. Now, it would be easy for someone to say, well, this is at its best, so it can only get worse. Well, I'll say at the beginning of every bull market, this will tick up into fully bullish, and then it will just move up and down in this area. In a bear market, it will tick down to fully bearish, and then it will move around in this area. So it can stay in that area a long time. Lockout rallies is basically what we're thinking about. Don't want to curse the market. Probably just have. So, this is the old thing, you'll see it shared a lot. If you expose your risk, your account risk, to 30%, in a bear market, then you've got to make 43% to get back to break even before you can make any money. If you expose it to 35%, well, you've got, it just gets worse. If you expose your account to 50%, that would be the equivalent of me taking 50 trades with 1% risk. Then it's 100% to get back to it. This is the whole, you don't want to be down this end. Your risk can be run. I've shown 10%, the lowest number on this chart here. And as we showed in 2013, we had fantastic gains on we went up to 6% heat maximum in that market period. Fantastic gains. Risking less. So, that's what it's about. You grind out the bad periods, chopping up and down a bit, and then when the market moves, you're close to all-time highs, and you just, you're always within. The more vol you expose your portfolio to for a profitable method, yes, the more money you will make, but it will endure gut-wrenching drawdowns. I'm happy with lower drawdowns, in my portfolio, and compounding year on year on year on year on year. So, if you doubled the risk I take, you would double the volatility. If you half the risk I take, you would half the volatility. You'd also double the returns, half the returns. That is basically how the risk management sort of mechanism works. And let's just quickly look at, I think I misquoted this the other day. I thought it was on for 13 weeks on the trot. We're on a 12-week winning streak so far. If we close higher this week, and by the looks of it, we've got pops in Gym Group, I know my swings have done really well this week. It will be a 12 weeks on the trot winning streak, and the market, we got a bit of a bounce, then a pullback, we got chopped up a bit here, then higher low, higher high, off we go. That is trading. There is no equity curve what goes straight. You zoom out a long-term equity curve with low risk far enough, it will look pretty straight line. But you zoom into the occasional year, you're going to get high lows, high highs. That is just how the markets always trade. There's no way around that. So that's just a little update where we are. We're actually up 0.55, just over 0.5% as we speak. And it's turned out to be a pretty nice day. Okay.